without further ado, yes, thank you very much for attending today's webinar. It's all about the Italian election. I'd say if I was just to encapsulate this situation in one sentence, it would be nobody seems too worried, but you never know. So I think it's worth, we're not going to take too long on this today, 20 minutes or so hopefully, just going 20 minutes through the potential scenarios here, and also just what it's all about, why it's interesting, and then how it could affect the market. So let's get on with that. So the topics we're covering today, obviously it's the Italian election, that's on this Sunday. So my main market reaction is likely to be firstly in FX markets early Monday, and then obviously when stock markets open on Monday. So, luckily LCG starts its indices trading quite early, so there will be some index trading going on before stock markets actually open. So we're going to talk about why this election matters, just a very brief explain of the electoral system in Italy. What are the polls currently saying? What is a good or bad result? Obviously as far as markets, not so much about your political persuasion. What's the mood of the market right now? Is it calm or is it panicked? As I mentioned, it looks relatively calm at the moment. But we'll have a look at some market reaction scenarios, not in the Italy 40 actually. We're going to look at the EU stocks index because it's a bit more of a kind of broader, more interesting index. I often look at the DAX as my sort of proxy for Europe, just because Germany does sort of drive the overall European sentiment, but sometimes in these kind of cases you can actually get a little bit of a haven flow into the DAX when there's troubles in other parts of Europe. Certain pension investors and things, they have to have a certain allocation in stocks. If they've got a certain allocation towards Italy and then things look a bit rough there, they'll shift that stocks allocation into Germany. So they won't sell stocks outright, they'll just shift where their portfolio is invested. So then hence I'm using this kind of more like a broader European index, which I'm sure you're all familiar with if you've looked in the indices section on LCG Trader, and of course Eurodollar. So why this election matters, just some little facts for you. Italy is the third biggest economy in Europe and 8th largest in the world. So they still are a mighty country over there in Italy. It's days of the Romans are not too far removed. More interestingly, perhaps, from a market's perspective, is that the size of Italy's bond market is massive proportional to their economy. So we've said they're the third biggest in Europe, fine, 8th biggest in the world. But they have the third largest bond market, and that's in the world, not just in Europe. More recently, a theme out of Italy has been the indebted banking sector. Monte de Paschi is constantly in the headlines getting bailouts. But the overall kind of good tone in terms of European growth has put those kinds of themes on the back burner for the time being. Obviously, while all of Europe's growing, Italy's kind of being pulled along with it, though there's a certain element of, starting from a low base, improvements are always going to be better. But even so, Italy's still lagging a little bit behind economically, you could say. Italexit sort of thing the Daily Mirror likes to talk about a lot. Could Italy leave the EU? In short, as a result of this election, no, but certainly the way this election turns out eventually could. It's certainly something that's going to be in the back of the minds of investors, and we'll talk a bit more about the specifics of what scenarios could indicate that. The EU approach to Brexit, this is a bit more marginal than I would say than in the German election. But the Italian leadership now is a bit more important, given that Merkel is a bit more weakened because of this renewed grand coalition where she's had to make a few concessions in Germany. Maybe Germany not quite as strong at the table as they once were, gives a bit more room for strength from Italy. Future EU integration, obviously the five-star movement, that's the party, the kind of populist party we'll talk a little bit about. Look at their poll numbers and things. They're anti-immigration, so obviously that's somewhat against some of the main rules involved in being part of the EU. Five-star movement would certainly like an Italexit, or Quitaly, I've also heard thrown around. it's probably going to be this will be like the first stage towards it, not it imminently happening, if you know what I mean. So the ECB, you always have to consider what these kind of events, what their implications are for monetary policy. And, you know, in the past, though they've never really fully admitted to it, but signs of political instability have tended to push back the ECB tightening their policy. And I think you could argue that actually probably midway through last year, the ECB could have reined in QE, but the remaining uncertainty, particularly around the German election, meant they didn't do it. Modern world history, there is a certain degree of history involved in, ooh, what have I done here? I'll just sweep in my screen. Let's get that resume slideshow. There we go. Yeah, there have been some nationalists in Italy in the not too distant future. Of course, I'm not saying it's going to happen again, Mussolini style, but worth bearing in mind. And of course, you know, can't forget, and we're going to look at the chart in a minute, is that markets have just had a big sell-off. So, so obviously that sort of sensitivity in the markets could mean a bigger reaction than perhaps otherwise to this result. So a quick explainer, this has been sourced from the FT. So 61% of the seats, this is based on a kind of new rule that was put in last year. 61% of the seats, so a certain percentage in the lower and upper house, will be awarded national proportional representation. So all these smaller parties will get some form of representation in that 61%. 37% will be elected in a first past the post system, much like we have in the UK. So what they've essentially done there, they've tried to kind of rejig the Italian constitution a little bit to go against the five-star movement, because then you need a pretty large percentage of the vote in order to, you know, that if you get the largest percent of the vote, actually your kind of the difference you have over the impact that you can have over the rest of the parliament is a bit more muted. So five-star movement, basically argue these recent rule changes with a mix of proportional representation and first past the post sort of hurts their abilities to influence policy. But it should be mentioned that there are lots of smaller parties, but they must win 3% of the national vote in order to gain a share of proportional representation of those proportional seats. So what are the polls showing right now? I think the FT have split it up quite well here without getting into too much of the nitty-gritty. The centre-right party that seems to be on about 37% as of a week or so ago. The five-star party down at 28%, and the centre-left at about 27%. So given that the centre-right party seem to be the kind of closest to maintaining power there, that would have, you know, that I think, assuming that those polls are going to follow through, but yeah, I've kind of ranked what would be a good or bad result accordingly. So very bad would be the five-star party winning a majority government. That just doesn't seem too likely. They are popular, as you can see here, but they probably don't quite have enough to actually take control of government themselves. What would be pretty bad is if they formed part of a coalition, but actually part of their manifesto, if you like, or one of their policies is not to be part of the coalition. So that doesn't seem particularly likely. Good, and also probably the most expected result is that the centre-right form a coalition, but the five-star still has quite a good showing. So a bit like probably in the French and Dutch elections, nationalists don't seize power, but they're clearly gaining some support, and that kind of bodes for tricky times ahead in perhaps future elections, particularly if we do experience some sort of economic downturn. people are going to be looking for some different answers. But we haven't quite got there yet, so it's more like a first stepping stone, if you like. And a very good result would actually be the centre-right party forming a coalition and the Five-Star Party receiving a lower vote share than expected, so not coming out with such a strong showing. Excuse me, would be a sign of sort of waning support of populism in Italy. A quick reminder, why is populism so bad? Having sort of nationalistic feelings and things. Not altogether bad, but from the sort of market standpoint, obviously it's a bit of a difference from the current status quo, which is obviously very much related to the EU, and so the populist EU rhetoric, etc. It's just a bit of a source of uncertainty, basically. You can put it down as simply as that. So I thought I'd look at just a couple of different kind of market metrics that we're not actually going to trade, but we can use as a sense of a mood of the market. This is the yield on benchmark 10-year Italian bonds. Now, what you can see is that the general trend over the last year or so has actually been down. Investors not requiring as much yield on their debt. We've had a bit more of a spike recently, and obviously that's just been a global trend of a higher yield environment, investors expecting higher inflation down the road, and to a large part explained why we had some jitters in the stock markets, not because of Italy specifically, because this kind of phenomenon is happening globally. So this little bounce, and not necessarily fears about Italy. You could argue that the rise in the US equivalent debt has actually picked up a bit more than this one has. So overall, I think you would say that actually you could say investors are not really demanding a lot more yield on their Italian debt. They're not selling their Italian debt in anticipation of some worrying event from this election. And then lastly, what you can do is just compare the yield on Italian to German debt, which is obviously, as I mentioned before, in terms of the indices, is typically a sort of safe haven bet within Germany, within Europe, because of the strength of its economy. And while the same thing here, we've had a little bit of a kind of pop. Actually, while we were, I would say this pop is largely related to the kind of sell-off that we've had in markets, but the drop that we've had at the end is basically people not demanding as much. The difference between Italian bond yields and German yields are coming in, so it's compressing this spread, which shows that actually people don't really think there's a lot more risk associated with Italy than there is with Germany. And this little drop in the yield spread here correlates to there being a bit of a bounce in the market, in stock market sales. So that being said, let's switch gears to the LCG trader and just have a look at these charts we had in mind. Oh dear. Oh no, skills are lacking. There we go. So euro dollar. Conveniently enough, this market's played out quite well since my Monday market update webinar, where we basically highlighted the 2360 as resistance on this trend line, and as a little bit of a pivot from some previous lows over here in this little bounce that we had on the daily candlestick. We have rolled over from there. We're now below the 50-day moving average, and we've actually pipped below the neckline of what could be a double top pattern, basically. So the way the euro is positioned here actually is sort of on the cliff edge of a potentially larger downturn in the market. Should we get some continuation to the downside here, particularly just a close lower today, it's not complete confirmation, but it's certainly a good sign that the market wants to generally trend lower, was that we could certainly head down to this swing peak up here around the 2090 mark. 21's the round number close by, or down to this kind of swing low, which actually you can see was kind of the resistance that we broke from and pulled back to as support. 119.40 or 119.50, you could say, is probably the closer round number. So maybe the Italian election plays some role in whether we actually get a fall from this technical pattern. If we just break down in the euro heading into the Italian election, I'm not sure there's going to be much from the Italian election that stops the fall. So definitely keep in mind where this price trend is relative to this 122 mark. So I've got it down as 122.14. I think it's just 122.10 is probably the closest round number. Where it finishes over the next couple of days in relation to this line probably dictates the overall market environment and how we want to react to this Italian election. So if we do manage to hold above this line, maybe we're trending back up to 125 again. It's just a consolidation pattern before breaking higher. We have struggled at 125 though. Does look very much like a double top pattern, but maybe it's too obvious. I'm always dubious of these market patterns that are almost too good to be true. This is almost one of them. But nonetheless, you've got to follow what you see. A break below 122.10 does speak to lower prices going forward. Firstly, that 2090 and then 1940. Switching over to EU stocks, as I mentioned. Now, this is a pretty familiar pattern across global indices, is that we obviously had the big correction in markets. We bounced back pretty nicely, but certainly noticeable that we've had a much weaker time in Europe than we have in the US. And while if you look at an equivalent chart of, for example, I might as well just show it. Do I have it close by? Of the Nasdaq. You know, we're right back at the highs here, or even the Dow, we're well over 50%. But then if you look at Germany, looking pretty soft, and then back to the EU stocks, again, quite soft. We're stalling at this previous support, which we got a kind of false break above and a turn lower. And this was a kind of a resistance that we broke above. We're coming back to test that resistance right now. So if this trend is to continue higher, this would be a natural pullback to retest the old highs before moving higher. So where we stand at the moment, roughly around this 3,440, again, is quite pivotal. A close below here suggests that we've got more downside to come. And while there is a little bit of interim support, I think given the jitters in the market, excuse me again, we could have a fairly big sell-off down to the 3,340 mark, which kind of denotes some of these closing prices. And, you know, that's just being conservative, actually. I mean, I'm not talking about definitely a retest of the lows, but a big downward jolt should the 3,440 not hold up. And that's where we are as we stand. If it does hold up, as I said, good chance we could push further to the top side. And, you know, this collection of lows over here, in the absence of any kind of serious resistance or support in this area, would, to me, be a kind of logical target area, and that sort of 35.30 mark. Watch out for the 50 level on the RSI. We've failed to push above it, so still in kind of bearish conditions on that on that metric. I think I've got it set to the 20-day moving average, but obviously if you change up the time period, as I'm sure you're aware, you can from 20 days to 50. Then you can see the outlook looks a little bit bearish now. We're well below the 50-day moving average. Of course, that 35.30, coincidentally as it happened, I didn't plan that, correlates quite well with that level, so maybe we can still retest it, but it speaks to more of a kind of downtrending environment. So we just need that downtrending shock. We've got a bit of economic data out this week. And there's been quite a big reaction in currency markets and a somewhat large reaction in stock markets to Powell's testimony. If that gets some follow through over the next few days, I'm talking about Jerome Powell, head of the Federal Reserve, of course. He gave a speech. It was quite hawkish on the US economy. And so the dollar has rebounded, hence the euro's looking soft. And stock markets have sold off from the recent peaks. So if we get more dollar strength and more stock market weakness, then obviously that's these levels giving way, potentially spurring some bigger moves in the market. So I think I'm going to leave it there, guys. I think that covers most of it. Of course, we can talk in depth about Italian politics, etc., but I don't think that's the remit of this particular webinar. I hope this was useful. So obviously, be wary. There is some event risk on Sunday, so manage your positions accordingly on Friday, if indeed you are holding some positions over the weekend. And obviously, get up nice and bright and early on Monday to see if there are some opportunities as a result of this election. All right, cheers, guys. Thank you very much for attending. As always, Jasper signing out. Cheers, guys.